Hello everybody and welcome. This is Tushar Chande. In today's episode I will discuss the big bar top, a fairly common chart pattern that seems to occur at key turning points marked by an increase in volatility. So let's take a closer look. A gentle reminder, past performance is not necessarily indicative of future results. So a big bar top or bottom generally represents a rise in volatility before a change in direction. And during major market events, the volatility may persist for a while. Sometimes the actual big bar may occur a few bars before or after the actual high or top. And it could be an up bar or a down bar, though the down bars are more common. And the converse of this logic is that there are, quote, no big bars during a trend. That is, volatility declines during a trend. This is daily data for AMD or advanced micro devices. It topped in early March, and you see we have a big bar that marked the top of this trend evolution, and then we've been declining steadily ever since. This is daily data for NVIDIA, which is in the same industry group as AMD. And again, we have a big bar near a top and another big bar near a top. This is daily data for BND, the Vanguard Total Bond Market ETF. We are in March of 2021, and this is the COVID decline. And this decline was also marked by a big bar top. So this pattern is not limited to the equity markets per se. Talking of the equity markets, this is daily data for the S&P 500 index. We're in March of 2021 at the start of the COVID decline. And here the big bar occurred, say 2 days or 3 days after the absolute top of the move. So the big bar can be offset by a few days. Here we have daily data for a yen dollar cross rate, a completely different market, and yet we see a big bar top with a big bar, this time a top with a up bar. We're back to AMD on the daily data with the big bar top, and I was trying to understand how I could quantify the height of this bar so I could non-dimensionalize it and use it to build a new indicator to detect big bars on any type of market. So I'll show you that next. So this is the same data as the previous slide, but I've added my big bar indicator down below. The indicator has an open scale, so the y-axis can be as big as needed. And then I have two lines. I have a blue line and a red line. The blue line is always drawn at 2.5 units, so this gives us a fixed reference. And the red line looks at the last 100 bars and gives us a rolling reference of bar height. And here's a big bar. You see that we have a 5-unit bar. So it's clearly a standout bar because it was above both our red line and the blue line. And so when this first occurred in real time, we would rapidly see at the end of the day that we've had a big bar, and that gives us a chance to think about what we want to do next. We're back to the S&P 500 daily data. This is a March decline due to COVID. The indicators plotted below, the scale is high as 8 units. The blue line is a fixed 2.5 units. The red line is rolling 100-day units. And we see that the first big bar occurred where I've identified here, which is a few days after the peak. But then we are followed by a series of really big bars as the whole market declines. Eventually we form a bottom. Of course, it's hard to tell when that bottom would occur based just on this indicator. But as the market then stabilized and rallied, you see that we have a big decline in volatility. So volatility can decrease when there's a steady trend in one direction or the other. This is the bond market with the big bar top. The scale now has gone all the way up to 40 units. The first one that really stood out here clearly marks a top. Then we had a number of really huge bars, and then we have a spike bottom. So when you have this huge increase in volatility to 35 units, and then several days of high volatility as the market tries to stabilize. And once it starts trending, you see we have a decline in volatility much less than our blue line, which is 2.5 units. This is the yen dollar cross rate now with the indicator plotted below, and the scale is up to 6 units. And clearly this bar, which is an up bar, stands out as a huge outside bar. So food for thought in real time. This is the VIX daily data. The big bar indicator scale has expanded to 40 units. And on Monday, we had this incredible spike in all the way up to 65. And you can clearly see that the spike is at all the way up to 35, 40 units. So clearly a huge bar. This was an up bar, but the market simply cannot support such huge spikes in volatility. And surely we've had a decline in volatility as the week has progressed. This is daily data for Tesla with our recent high big bar top. The indicator again shows this big bar very clearly, but it's only up to 3.5 units. So clearly less volatility, but the big bar stands out. This is Nvidia with the recent top above 140. Look, we've had several days on the indicator below the red line and then one big spike. So the big bar top was clearly visible with a spike up to 8 units. This is daily data for Eli Lilly. Big down bar that stood out with 5 units of volatility a few days after the high for the move. And this bar is dominating. So even though we had a strong rebound due to good earnings report, it's above the blue line, so stronger than the 2.5 units threshold we like to use, but still a little bit below the red line. But nonetheless, big bars here also standing out on the upside. So I hope you'll pay attention when you see big bars on the chart, and I hope you like and subscribe. The tools I've used are at trendspider.com, and you can also find them with this link.